Today, we're breaking down how you can have multiple VA home loans. The crazy thing is the myth is still out there that you can only have one VA home loan at a time or just use it once, and absolutely it's not true. You can use the loan multiple times and really have as many as you want. Now, what's important about this video is you have to watch it in its entirety because there's a lot of nuances to using the VA loan multiple times, and I'm going to break all of that down today. So I want you to know how it works from start to finish. Even if you're not thinking about using another VA home loan or currently don't have a VA home loan, if I've learned anything in life is that it's constantly changing. So those are, you want to know how this benefit works. Plus, helping other veterans is important so you can share that knowledge. So we're going to cover 5 things today. We're going to talk about the 2 sets of rules the VA has around the VA loan. There's an old rule and there's a new rule. So you got to know how they work together or separate, right? We're going to talk about understanding how much entitlement you have locked into your property. We're going to talk about how to read a certificate of eligibility, and we're also going to determine how much you can borrow without a down payment. And then the last thing we're going to cover is how to calculate a down payment on a VA loan if you've exhausted your entitlement. So first thing we're going to talk about is the 2 sets of rules, right? And we're going to cover the new one first because it makes things pretty simple. So back in 2019, they passed the Bluewater Navy Vietnam Veterans Act of 2019. Basically, what that did is it opened up the VA home loan to basically have no limit on how much you can borrow as long as you're eligible, right? Meet the time, character, and length of service. And are you qualified? Can you afford that mortgage payment as long as you don't have an outstanding VA loan at the time of closing? So if you want to buy a $5 million property with 0 money down, you can do that with that beautiful, beautiful VA home loan. Now, if you have a VA home loan, then it goes back to the old rules of purchasing a property. So just one last thing on this new rule. I want to emphasize, if you have a VA loan and you plan on selling it in the morning and buying in the afternoon, you can get pre-approved with no limit, but it will be contingent on the sale of your current property. So keep that in mind. Now, let's talk about the old rules. This only applies when you have multiple VA home loans, because people get confused with it. They're like, well, there's a county cap on how much you can borrow. Yes, there is, but that is going to be based on Freddie Mac's conforming loan limit, which I'm going to break down and show you how you can find that here in a little bit. Okay, now what that means is basically there's going to be a cap on how much you can borrow before you have to do a down payment. So I'm going to show you guys that in order. The first thing that you need to do is understand how much entitlement you have locked into your property. Now, that's going to require you to get a certificate of eligibility. And I mention that because people will be like, well, I already, I know my mortgage balance. That's not what we're looking for. You have your entitlement. The original amount is what's locked into your VA home loan. Okay, so if you bought a house for $1 million and you got a VA loan for $1 million, and today that mortgage balance is $600,000, it's not that you have $600,000 locked in. You have the original $1 million of entitlement locked in. This is also important if you're thinking about buying or getting an assumable mortgage, or if you have a VA loan, you want to offer someone an assumable mortgage, because a veteran would need enough entitlement to cover the entire piece without a down payment. So check out our channel to learn more about that. I have a whole video on assumable mortgages. So the first thing you're going to do, let me pull this up, is that you're going to go to the VA's website, to va.gov. Now, you can also schedule a call with us and get a certificate of eligibility. For us, it literally takes seconds to do. And most of the time, the certificate of eligibility is going to come back right away. So you really don't have to waste much time, right? So you're going to go to your login. You're going to log into your site however you normally do, okay? Now, this is going to be the important part. in order to get your own certificate of eligibility, you're going to go to housing assistance, and then you're going to go to request a certificate of eligibility online. They make it really easy to do that. Now, you're going to go down here and then you're just going to click sign in and request your eligibility. It is that simple. So let me just switch this here back to our original screen. All right, so now and I also checked the mobile app on the VA site, and I couldn't find being able to request it online. So if you guys want to pause the video right now, get your certificate of eligibility, and then we can go over it together, because that's what we're going over next: how to read a certificate of eligibility. Now, I'm going to go over two types of two ways a certificate of eligibility is going to be read. It's going to be one when you don't have an outstanding VA home loan, and one that reads a outstanding VA home loan, so you get a good comparison between the two. So let me pull up the first one and share the screen with you guys. Okay, so basically what you're going to see on your certificate of eligibility, it's going to be the veteran's name here. It's going to be the last four of your social. Obviously, I redacted this one. You also have entitlement code of 10, branch of service Army, and then here it's going to say exempt or non-exempt from the VA funding fee. Now, if you recently got your disability rating, your COE is not going to be updated, so you're going to have to contact the VA. Again, they're really easy to work with as far as the regional loan centers. You give them, you basically have to upload your documents or have the lender update the documents for you, and then they'll be able to update it. It takes like 2 or 3 days, and then you're going to get your funding fee updated. Even if you're going through the process, right? You're going through the home buying process. As long as you get your award letter prior to closing, this can be all updated, so don't stress out about it. Okay, so here it's going to show prior loans charged to entitlement. So if you have an outstanding VA loan, it's going to be shown here, which I'm going to show you next. Here it's going to say this veteran's basic entitlement is $36,000. Now, there's two tiers of benefits. There's your tier 1 and your bonus entitlement. So the bonus entitlement got changed a while ago, because back in the day when VA loans came out, they're like, what homes are going to be over $144,000? Because when this came out, houses were like 10, 15 grand. So they didn't anticipate it. Anyways, it's changed. If you have $36,000, you have your full entitlement, full amount. So don't stress out about it. You have the full amount on here, okay? So now let's go over what it looks like when you have entitlement charged. And if you've had a VA loan and you sold that property, you got to make sure that you double check this to make sure that it's fallen off. Also, if you had a foreclosure with your property, you need to understand how much entitlement you have locked in, because if you had a foreclosure, then it goes back to the old rules where you have a max amount that you can borrow. But right now, we're focusing on how much entitlement you have charged, so you know, right? So in this example, right, we have the entitlement charge is what we're always concerned about here, not what the loan amount's going to be. But this is based on a brand new mortgage. You see down a little bit below that the veteran has $36,000 of entitlement, right? And that's what we had on the prior one. And the max loan amount was $144,000. Well, the VA loan guarantees 25% of a loan, right? So the max entitlement is $36,000. Do the reverse math, basically multiply that by 4, and you get a max of $144,000, right? This is just an example there. So the same thing's going to apply. I got my nifty calculator, right? So 131,500 times 4 is going to be 526, right? So that's the original amount charged. Now, what's going to happen is if you did an interest rate reduction refinance loan and your mortgage balance was much less when you did the IRRRL, it wouldn't change your entitlement amount, because that amount would still stay the same. That's why it's so important to understand this certificate of eligibility, because people confuse it all the time and then they end up getting denied for what they want to do. So this is why it's so important. You need to look at the entitlement charged, because also if you have a VA funding fee, that's going to be in here, and also it's going to affect what you have. And there's also a possibility that you have a VA home loan with 0 entitlement charged as well. I know it sounds somewhat confusing, but if you do a 25% down payment or you do a cash out and you max it at the 75% loan to value, you technically can get a VA loan and use none of your entitlement, which I think is pretty cool. But you definitely need to review that so you know how that works, especially with those interest rate reduction refinance loans. Now, so you have your entitlement amount. You're going to take your entitlement amount times 4. So in prior example, it was $131,500 as it was charged. You multiply it by 4, and that's the total entitlement that you've taken out. So in this example, like we just talked about, it was $526,000. Now, so the next step's going to be you need to go. Let me back up. Earlier, I mentioned Freddie Mac is the one that the VA goes off of. The challenge with Freddie Mac is that their website is not great at all. So I use Fannie Mae's AMI lookup tool. They mirror each other. So let me share that with you guys. And I'm also going to drop a link below. Okay, so what we've determined is that we've determined how much entitlement we've used. Now we need to look up the single family loan limit for an area. So here we go. So this is the tool. I'm going to again drop it down in the link below. And I'm going to use a couple examples here. I'm going to use an example for the regular county limit, and I'm also going to share with you high balance areas because how much you can borrow is going to change based on where you're purchasing a property. So let's look up Arlington Heights, Illinois as one of the examples. And so basically what you're going to see here and what you want to focus in on is going to be the conforming loan limits and one unit dwelling. So in this case, it's $766,550, which is pretty much the entire United States. But still, you want to double check, especially if you're looking in high cost areas, then it changes pretty significantly. So in this example, right, when we see the $766,550, you're going to plug that into your calculator, okay? $766,550. Now, in my example, the veteran entitlement used was $526,000. So you take the $766,550, you subtract out the $126,000, basically leaving the veteran $240,550 to use to purchase another property without a down payment. Okay. Now I'm going to use the same numbers, but I'm going to use a different area. So I'm going to use Alexandria, Virginia as the other area. Now in the DMV, the single family loan limit is much higher because the cost of living is much higher. So in Virginia, and especially in Alexandria, the loan limit is $1,149,825. So let me plug that into my nifty calculator. 49825. So using the same example of purchasing a property for $526,000, I'm going to subtract that from the $1,149,825. So if I were to be buying in Alexandria, Virginia, I can actually qualify for $623,825 without a down payment. Now that is pretty significant. It's huge because you qualify in different amounts in different areas. Okay, so hopefully that all makes sense. Again, I'm going to drop the link below so you know how that piece works. Now, let's talk about the last piece is how to calculate a down payment on a VA home loan. So what you're going to do is you're going to go through the formula and see how much money you have left over. So in my last example, we had 600 and I'm going to actually make the numbers a bit easier. Let's say you do the math and you have $500,000 left as your entitlement, right? That's how much you have left over. And you want to buy a property for $600,000. So remember, earlier I mentioned the VA guarantees 25% of a loan. So the VA is already guaranteeing 25% of the $500,000. But you want to buy a $600,000 property. There's a $100,000 spread between the two. So you are responsible for doing a 25% down payment on the $100,000. So it'd be a $25,000 down payment, okay? Now, if you did this math, and let's say you bought in an area where the limit was 766,550, but you bought $1 million place, well, you've exhausted your entire VA benefit. So if you want to use the VA loan again, then it's going to require a 25% down payment. I know I just put up 3 when I was trying to do 2, but it requires a 25% down payment on the whole thing. That's why sometimes those options will open up, to maybe use different loan products, but still the VA loan is phenomenal. There's a ton of stuff that you can do with it. So make sure you guys smash that like and subscribe button. You got questions, want more videos on a certain topic, drop them down below. Always happy to help the veteran community, and I'll catch you guys soon.